Well, howdy there, Internet people. It's Belle again, and welcome to The Roads with Belle. So today, we're going down the roads to understanding Trump versus Warren Buffett, inflation and the market. So, we've got a question, and it might help explain a key concept that America's working class really needs to grasp, especially during the Trump years. The stock market is not the economy. And even if you already know that, this is still worth going through. Okay, so here's the question. Trump's inflation doesn't seem to be as bad as anybody thought, and the stock market hit an all-time high after the news that it only went up a little bit more came out. I guess the economy's not going to get that bad after all. You can talk about all the data you want, but the real investors, not YouTube people, say you're wrong. They aren't going to pump the stock market with inflation on the way. They aren't? Who told you that? You believe that because you, like most people, believe the stock market is a barometer for the general health of the economy. And when the market is running on fundamentals, it is. But when it's not, it isn't. They aren't going to pump the stock market with inflation on the way. If you want to follow along, pull up the Dow for the past 5 years and pull up a monthly inflation chart for the past 5 years. December 2020. The Dow is at an all-time high. Inflation is low. But Trump's first-term policies are about to catch up. Inflation started climbing within 60 days, and within 6 months, it was above 5%. The stock market can be at an all-time high with inflation on the way. That's not some deep cut in economic trivia. That just happened. What's more interesting is that on December 30th, 2021, the Dow was at an all-time high. Inflation was at 7%. The stock market can have an all-time high, not just with inflation on the way, but with massive inflation already underway. The stock market is not a way to measure the economy for the average person. Stock market prices will go up while the average person is suffering economically, as long as the investors think they'll make more later. The rare moments when the stock market is a metric for the economy is when it is totally operating in accordance with fundamentals. That rarely happens. Trump's general idea is that the stock market should always go up, but in reality it shouldn't. In fact, stock market climbs that aren't grounded in realistic expectations of returns precedes pretty much every major economic hit. Trump's view of the economy seems to come from playing the market, not actually building industry, but building brands and cashing out. So the stock market is only a metric for the general economy when its values are based on fundamentals. What's the easiest measure of knowing whether it's based on fundamentals? Here are some things to know. The country's gross domestic product is the total market value of all final goods and services. So basically, all the dollars changing hands makes up the GDP. Not all companies are publicly traded, so not all companies are part of the market. The total value of the market is best measured by the Wilshire 5000. When the total market value exceeds the GDP, there's a disconnect from fundamental economic principles. It can fluctuate a bit because the market is based on expected performance in the future. But the further those numbers are from each other, the more disconnect there is. Right now, the market is more than twice the GDP. That is more than it's ever been. The market has never been more disconnected than it is right now. Do not use the market as a gauge of the economy right now. The idea of comparing the country's GDP to the market is called the Buffett indicator, named after Warren Buffett. Whose economic views do you want to follow? Warren Buffett, a man whose name is synonymous with genius investing, or Trump, a man whose name is synonymous with bankruptcy. Going back to the original message, Trump's inflation doesn't seem to be as bad as anybody thought. Most analysts don't expect to see the tariffs really show until right before Christmas. Remember, Trump's tariffs were such a good idea, he had to keep suspending them. And the big market with China is still suspended. So there's no way that can't show yet. Back to the message. And the stock market hit an all-time high after the news that it only went up a little bit more came out. I guess the economy's not going to get that bad after all. I hope this video helped clarify that the market is not the economy, and it's not a good indicator of the economy. Back to the message. You can talk about all the data you want, but the real investors, not YouTube people, say you're wrong. They aren't going to pump the stock market with inflation on the way. Real investors built a giant cash fund, so they're well positioned to scoop up stocks when they drop in value. And lots of investors pump the stock market when massive inflation is underway. Why? Because it isn't a tool for gauging the economy. When inflation is up, companies generally have an easier time beating last year's number when it comes to revenue. Just saying. So, there you go. A little more information, a little more context, and having the right information will make all the difference. Y'all have a good day.